Every time you tap that little piece of plastic, you're not spending your money. You're borrowing someone else's, and a bank is quietly deciding what that costs you. Here's how they actually work. Most people think a credit card is just a debit card that looks a bit more important. Same swipe, same beep, money leaves, done. But that's not what's happening at all. Behind that 1 second tap is a tiny loan, a hidden clock, and a business model so clever it makes billions from people who are convinced they're getting free stuff. Stick around, because by the end of this, you'll understand the one trick that lets you borrow the bank's money for weeks completely free, and the single mistake that quietly costs ordinary people tens of thousands over a lifetime. And here's the strange part. Most people get these two things exactly backwards. So let's start with the thing nobody spells out. A credit card is not money. It's a loan. Every single purchase is the bank paying the shop on your behalf, and you promising to pay the bank back later. That's the whole machine. The plastic is just a key that unlocks a loan, instantly, at the till, for any amount up to your limit, with no forms and no questions. So that number called available credit? That's not your savings. It's simply how much the bank will lend you right this second. And all of this began supposedly with a forgotten wallet. The story goes that back in 1950, a businessman named Frank McNamara was out at dinner in New York when he reached for his wallet and realized he'd left it at home. Mortifying, so he had an idea. What if there were a single card you could use at lots of different places and settle the whole bill later? That became Diner's Club, the first card you could carry instead of cash. Then, 8 years later, Bank of America took the idea and did something wild. They printed 60,000 cards and simply mailed them out, completely unasked, to everyone in one Californian city. People who'd never applied for anything suddenly found credit in their letterbox. That messy experiment grew into the card the whole world now knows as Visa. Here's the simplest way to picture what you're actually holding. Imagine a small corner shop where the owner knows your face. You grab your groceries and instead of paying, you just say, "Put it on my tab." At the end of the month, you come back and settle up. A credit card is exactly that tab. Except the shopkeeper is a giant bank, the shop is the entire planet, and the bill gets settled automatically whether you remember it or not. Now here's the first thing almost nobody realizes. That tab comes with a hidden gift. It's called the grace period. From the moment you buy something to the day your bill is actually due, the bank charges you nothing. No interest, not a cent. And depending on the timing, that free window can stretch anywhere from about 3 to 7 weeks. Sit with what that means for a second. If you buy something right at the start of your billing cycle, you can be using the bank's money for nearly 2 months. And it costs you absolutely nothing, as long as you pay the full amount when the bill lands. That, right there, is the trick I promised you at the start. It even has a name: the float. The smartest cardholders treat their credit card as a short, free loan they take out and fully repay every single month. They never pay a single cent in interest, and in exchange, the bank quietly funds their entire life, weeks in advance, for free. Which leads to an obvious, almost suspicious question. If the bank is lending you money for free, how on earth does it make any profit? And the answer genuinely surprised me when I first understood it. They make money off you even if you never pay a single penny in interest. Here's how. Every time you pay by card, the shop doesn't actually receive the full amount you spent. Before the money ever reaches them, the banks quietly take a slice off the top, usually somewhere around 1 to 3% of the purchase. That cut is called the interchange fee, and the merchant pays it, not you. It sounds tiny. But now multiply that little slice across billions of taps every single day, all over the world. That alone is an ocean of money, which means even the disciplined person who pays in full and never owes a cent in interest is still making the banks rich quietly every time they tap. Then there's a third stream, and it's the one that hides in plain sight. Fees. The annual fee just for owning the card, the late fee when you miss a date, the charge for using your card abroad, the eye-watering cost of taking out cash on it. None of those need you to be in debt. They're just tolls, sprinkled along the road, and most people pay at least one of them without ever noticing. But the real treasure, the big one, comes from the people who don't pay in full. Because the moment you carry even a little of your balance past the due date, that lovely gift vanishes. The grace period ends and interest switches on. And credit card interest is brutal, often around 20% a year, sometimes much more. Picture it like a taxi meter. As long as you pay your bill in full each month, that meter never starts. The ride is free. But the day you leave a balance sitting there, the meter clicks on. And it keeps running every single day on everything you still owe. Worse than that, it charges you interest on top of your unpaid interest. So the debt quietly grows while you're asleep. And this is exactly where they get you. Look at any credit card bill and you'll spot a small, friendly little number called the minimum payment. It looks harmless. It feels responsible to pay it. It is a trap. That minimum is carefully designed to be just large enough to keep you out of trouble and just small enough to keep you in debt for as long as is humanly possible. Let me show you with a quick example. Say you owe $5,000 on a card charging 20%, and you only ever pay the minimum each month. You won't be free in a year. You won't be free in 5. It can take over 20 years to clear. And by the end, you'll have paid back roughly double what you originally borrowed. Same shopping. Twice the price. Purely for being slow. Paying only the minimum is like trying to empty a sinking boat with a teaspoon while the hole is still wide open. You're moving, you're sweating, but you're not really getting anywhere. So now the whole business model finally snaps into focus. The bank's favorite customer is not the careful one who pays in full. It's the person who carries a balance month after month after month, feeding that 20% meter forever. And all those shiny points, the cashback, the airport lounges, that's the bait. It's funded by the swipe fees that shops pay and the interest that struggling people pay. So every rewards card quietly splits its users into two camps. The people the system is subsidizing and the people who are subsidizing the system. Those free flights come from somewhere. They come from whoever's only paying the minimum. And before we wrap up, let's bury the biggest myth of the whole lot. You've almost certainly heard that you should carry a small balance to build your credit. That you need to owe a little to look good. That is flat out false. You do not have to hand the bank a single cent in interest to look responsible to them. Paying your bill in full, on time, every month is precisely what makes you look trustworthy. Carrying a balance doesn't build anything. It just makes you poorer. Nobody on earth gets rewarded for volunteering to pay interest. So here's what a credit card actually is. It's not free money, and it's not your money. It's a loan with a hidden gift wrapped around a hidden trap. The gift is weeks of borrowing for free. The trap punishes anyone who's late or slow. Use the gift and never trigger the trap, and the bank quietly works for you. Forget that one rule, and you end up working for the bank. One minimum payment at a time. So in real life, the rule is dead simple. Treat your credit card like a debit card with a delay. Only ever buy what you could actually pay for today. And then pay the full statement balance every month. Not the minimum, the full amount. Do that and you get the free float, the rewards, and the convenience, and it costs you absolutely nothing. The card becomes a genuine tool. Break that single rule, and the very same card turns into one of the most expensive loans you will ever take. So credit cards are really just short loans with a free window and a hidden meter. Hit like if that changed how you see that little piece of plastic. Subscribe if you want more of these. And next week, we're explaining the 3-digit number that quietly decides whether any bank will ever trust you, your credit score, and why almost everything you've been told about it is wrong. See you then.